this afternoon with our final talk for Bitcoin for Corporations. We're going to introduce the ultimate MicroStrategy trio here. Michael Saylor, Executive Chairman, Phong Lee, President and CEO, and Andrew Kang, Chief Financial Officer. Welcome them to the stage.
Last session, Michael, Andrew, thanks for doing this. So this session is called the playbook for Bitcoin for Corporations. And with great timing and luck, Jack Dorsey just tweeted out the playbook for Bitcoin for Corporations. We'll get into that a little bit later because I do think it's excellent timing. And it's great to see the partnership and the leadership from Block and from Jack and Michael Rahani. If you're still in the audience, thank you, because I'm sure you had a big part of that also. So thank you to all. You are going to make this conversation a lot more fun and a lot easier. But let's go back to 2020, first quarter of 2020. When we started going down this strategy and this path. Andrew wasn't with us before. I remember Mike and I had quite a few lengthy conversations on the topic. But let's start with Mike. Let the audience know, why did we go into a Bitcoin strategy to begin with?
Yeah, I think the first quarter of 2020 was the beginning of the crazy years. And the world locked down, the offices emptied out, interest rates, the markets crashed, and then the interest rates crashed to zero, and the markets surged, and the world kind of got very confusing. Our first thought was, what about the core business? And then our second thought was, now everybody's working from home. They could get headhunted away by Microsoft or Google or Amazon, and they won't even actually have to move. And so we started worrying about existential issues like our employee satisfaction, how are we gonna grow? And then we looked at our assets and we realized our physical capital, we had 500 million in cash, was gonna yield zero. And the head of the Fed said it would yield zero for the next 4 years. And that made us a little bit worried. And then our human capital was not in the office, unstuck, floating in remote space, and we worried, how are we going to serve our human capital? And our conclusion was we needed to do something, and we also got this pressure from shareholders that we had all this cash and it was yielding 0% interest, and the cost of capital is normally 12%. So what do we do to keep the shareholders happy? What do we do to keep the employees happy? What do we do to actually get some benefit from our assets? And that got us looking around open-minded.
Yeah, and I think we looked at a lot of options, right? We talked about potentially buying back our stock, which in retrospect would have been dilutive. We brought in excellent bankers, excellent attorneys. A lot of folks, their thoughts were, why don't you put it in corporate bonds? You know how that would have gone. Keep it in T-bills. You know how that would have gone. Other alternative assets. And then we went down the path of actually executing on the strategy during that time. And some of our partners, Ming and I, probably talked nearly every day. Mike and I talked quite often. The board was very supportive. Folks like Dax Hansen and Amy Park were all part of the execution of the strategy. And it was a lot of work doing it for the first time. We also open sourced our strategy for Bitcoin for Corporations at that point in time. But I think even as we launched our first convert in December of 2020, I don't think we knew exactly what was going to happen over the next 4 years. So what changed in our thinking over the next 4 years, Mike?
I think our stages went from defensive, we needed to do something to protect the company, and then it went to opportunistic. And I think by the time we got to December, we were opportunistic. Our stock had doubled or almost tripled, and we thought, well, since it's tripled and we can raise money, we should probably do something. And then by the first half of 2021, it became, I'd say, opportunistic in a high gear, but sort of strategic at that point. When we did this, you do something once, like a convertible bond issue once, it's opportunistic. You do it twice, and it's programmatic. So I guess we went from defensive to opportunistic to programmatic. And the more we learned about Bitcoin, the more we learned about our place in the market, the more we started to think strategically that maybe there's a strategy and a long-term business strategy here. So after the programmatic, it became strategic, and then ultimately it became transformational. And we ended the journey as now we're a Bitcoin development company. We've transformed the way we think about the business.
And Andrew, you joined us midway through the crazy years, and I think maybe you made things less crazy, but share with us your thoughts on what you saw happen from when you joined in 2022 to now 2024 in the organization.
Yeah, it'll actually be, I think, 2 years next week. And, for me, just being part of the team has been transformational personally.
The officers and directors on Bitcoin. Bitcoin! Okay. C was very carefully think through investor communications and make sure that we built consensus with the investors, then move through a set of investor relations initiatives, including a Dutch auction or, in order to introduce the idea in the most graceful way possible. And then following that, reassess the situation, and every month we would look at the marketplace and reconsider our opportunities, and we would act rationally month by month, quarter by quarter, and that's how we got to where we are. Okay, you're online now?
I believe I am.
Okay.
So back to the question was, what's my experience been? And I joined 2 years ago in about a week or so. And if you recall, that was sort of around the time things started to get a little bit more volatile. I think, Phong, you might have even joked, like my first quarter as CFO was not the best quarter for MicroStrategy. But I think through that experience, it really sort of helped us solidify culturally within the organization a really foundational support for Bitcoin, in addition to the longstanding legacy of the software business. And when I fast forward from 2 years ago today, we've obviously seen a tremendous amount of rally in Bitcoin and a lot more adoption. We've seen that benefit from a company standpoint as well through people, not only our employees, but also our shareholders that have become more aligned and also feel stronger about our conviction. Because I can tell you, we've got probably the person on stage here who's most convicted around Bitcoin, but I think that has bled through, the entire ecosystem at MicroStrategy in the past couple of years.
Yeah, I think one of the related benefits, and those who are customers, thank you, and who joined our MicroStrategy BI World presentations, I had some folks note that we are innovating faster than we ever have on our core software product. Our employee turnover is lower than it's been in a long time. And so by adopting a Bitcoin strategy, you see benefits throughout the organization, culturally, retention and hiring and innovation. And that's just been awesome too. So Mike, here we are in 2024. MicroStrategy is the largest corporate holder, publicly traded corporate holder of Bitcoin in the world. And not many have followed yet in the last 4 years. What do you think in the environment today is different that will cause more to follow?
Yeah, I think we've had a lot of positive developments this year. Probably 2024 is the transformational year. The question that we posed in 2020, the existential question was, Bitcoin looks like the solution to our problems. In fact, it looks like the theoretical perfect solution to the problem we have. So is it too good to be true? Will it be banned? Will it be copied? Will it be hacked? Right? Humans have invented the perfect synthetic treasury asset, and so will it be banned, copied, or hacked? And after 4 years, we now know it won't be banned because it's been approved for inclusion in spot Bitcoin ETFs, and in essence has been endorsed as a crypto commodity, so not banned, but embraced. Will it be hacked? We now have 15 years with $65 billion in Satoshi's wallet, and that's the honeypot, and any hacker can get $65 billion or $60 billion if they wanted it, but they can't get it, so we know it hasn't been hacked. And will it be copied? And I think that now in 2024, we start to realize that no, it's not going to be copied. There's only one globally acknowledged crypto commodity in the world, and as a public company, we know, we couldn't do this with a security, even if it was a registered public security, and an unregistered security, a public company definitely couldn't do. So it has to be a commodity. We've now answered those 3 questions. Then we've got the fourth headwind was there were no public companies holding Bitcoin on their balance sheet. When we did a search, we found Overstock had $1 million worth of Bitcoin for a couple of months, and that was it. And so today you have a dozen publicly traded Bitcoin miners, and you have Tesla, and you have Block, and you have MicroStrategy, and you have dozens of SEC 40, investment trust, and so now you've got 100 type public entities, and we couldn't find one then. So that's the second headwind, and then the third headwind is this indefinite intangible accounting. It turns out that, if you're a company like ours and you've already executed the strategy and you've managed to get to the point where you have massive amounts of Bitcoin and people can calculate it, that accounting doesn't hurt you that much. But what it really does is it hurts anybody with a normal business that wants to put 5% of their assets or 10% of their assets, or if 10% of your enterprise value is Bitcoin and the other 90% is something else, what it does is it obscures the P&L and obscures the balance sheet. And so that accounting was a headwind. And now we're in 2024, you've got the option to elect fair value accounting. And I think in Block's announcement, they just announced they're adopting fair value accounting. So you've got the option, and in 2025, it becomes standard. And I think you've got the regulatory clarity that Bitcoin's a crypto commodity, and then you've got the support of the Wall Street machine that's spinning up. Now you've got Bitcoin research from Fidelity or from ARK or from, you actually had 3 analysts of Bitcoin on stage today. And when we were doing it, you remember we were looking at Andreas Antonopoulos videos. We had a different set of data sources. And so, the research is stronger, the regulatory support is clearer. The professional community, the accountants, the lawyers, that infrastructure is better. Oh, and then the other thing is institutional custodians. You have Anchorage on stage, you have Coinbase, you have Fidelity, you have a lot more choices there. And if you were a company today and you decided you were going to do this with an institutional custodian, you would be able to choose one that already has a dozen or 2 dozen publicly traded companies as customers that have already disclosed that. Whereas when we were getting into this space, right, we weren't following in the footsteps of anybody else. And that means that our accountants, our lawyers, our finance professionals had to obsess over a lot of risks and ask the question, well, how do you even disclose these risks? What does the SEC expect you to say about these risks, because no one's ever done it before? And so what's the appropriate way to treat it?
Yeah, I remember in 2020, the homework for all of us was to look at 40 hours worth of quality Bitcoin content. And I think we struggled to find 40 hours worth of quality Bitcoin content. And now the bar is 1,000 hours of Bitcoin content. So things have changed a lot. So let's think about the opportunity for corporations going forward. And maybe we can think about it in concentric circles. The first one being companies that already have a Bitcoin strategy. The second one being technology companies. And the third one being just generally publicly traded companies. So what's the case for companies that have a Bitcoin strategy? Bitcoin miners, companies that may be publicly traded, that have Bitcoin ETP products, companies that have Bitcoin custody or exchange solutions. What is the case for those companies to put Bitcoin on their balance sheet as a starting point?
The way I think of it, I start with Bitcoin miners. The public Bitcoin miners, the case for them is they should be issuing convertible debt and equity, and they should be buying Bitcoin because they are public, they are creditworthy counterparties, they can issue securities, and they would be raising money, equity, or cheap debt capital and investing in an asset which is going up, historically 40% a year or more. So that's very accretive for their business strategy. Their shareholders are already long Bitcoin. You have to believe Bitcoin is going up and not down to invest in a Bitcoin miner, right? There is no Bitcoin mining business model that works unless Bitcoin goes up in price. And if Bitcoin goes up in price more than 1% or 2% a year, then convertible debt is accretive and equity is accretive. So that's a fairly straightforward case, and fair value accounting makes it even easier, I think. I think the next class is Bitcoin exchanges and custodians. And for public ones, a Coinbase or whatever, well, you're in the business of convincing other people to buy and custody Bitcoin. And so for you to be buying Bitcoin quarterly and custodying Bitcoin, your own Bitcoin, sends a message to your customers that you actually believe it's a treasury asset and that it's safe with you. You can't really, in good faith, recommend someone buy an asset that you think is so risky as you don't want to use money to buy it, you know, if you're going to be a custodian. So I think Block and Jack's putting his money where his mouth is right now, and he's rolled out a product to allow all the small, mid-sized businesses that work with Square to dollar cost average into Bitcoin, and then, or sorry, yeah, Square the product, but Block the company is now doing the same thing. Right, and it illustrates that, you know, you believe in your own product, you know, you support your own ideas, and, you know, you're a trustworthy exchange and custodian to do it, and then he's showing people how to do it. I think that any other exchange, whether they're private or public benefits, a public company, it's kind of an easy thing because public companies can issue equity and convertible debt to do it. For private companies, private custodians, private exchanges in the Bitcoin, you know, community, my advice to them, and many of them have taken this advice, I mean, I think Alex Leishman showed today that he's doing it, is you know, you allocate some portion of your treasury to Bitcoin, and B, if you don't have enough, instead of raising $50 million in venture capital to fund operating losses or operations, you raise $200 million in capital, and you put $150 million into Bitcoin and $50 million into operations. Because if you believe that Bitcoin is the future, then it's obviously accretive. And if you don't believe Bitcoin is the future, you should quit, sell the company, and get out of the business. Who wants to do business with someone that's selling something that they think is going to zero, right? You've lost your, you know, your moral standing to be a vendor in the space if you don't support the future of the asset. There's a second order subtlety here, which is for public companies, the convertible debt markets really like a highly volatile asset. So if you're a miner and you issue convertible debt and you buy Bitcoin, then your equity becomes more volatile, then it becomes more liquid, then the options market comes to life, then the convertible debt comes to life, then your enterprise value grows, then your market cap grows, your premium expands, you can do it again. So this is the opposite of dilutive and risky. This actually de-risks the business strategy and is accretive if you're already long Bitcoin, as say a Bitcoin miner, and you're public. It's the way to get yourself out of a rut. If you're a private company, you have a bunch of VC and they want to invest money in private companies, but a venture capitalist would much rather invest $200 million 5 times than invest $50 million 20 times. It's just as much work to invest $500 million as it is to invest $25 million. So the real problem with VC is what's the use of proceeds? They have access to infinite capital. If you can generate a return more than the cost of capital, if you can beat the S&P index, you can raise billions and billions of dollars. There's infinite money. You know, SoftBank illustrated this. So it's not hard to get the capital. The problem is, what do you do if someone gives you $100 billion in capital? And what, you know, they did WeWork, right? And you can see the problem is you over-invest in bad ideas, right? Investing $20 billion in WeWork, you know, it doesn't work out that well. But actually, you can invest $20 billion in Bitcoin, and it would work out just fine. So if you're a private company and you have a Bitcoin treasury strategy, you actually can solve 2 problems for your venture capitalists. One problem is you give them a use of proceeds, which is highly accretive, that beats the S&P index. And while they're waiting to get paid, they get 2% management fee and 20% carry. And that's a screaming home run. So that's one problem you solve. But the other problem you solve is that some people don't want to take one-for-one upside and downside risk. So if you're a private company, you can actually issue a participating preferred stock, which looks like a debt instrument that you don't have to mark to market. So an investor can basically invest in Bitcoin, get the upside of Bitcoin, not get the downside of Bitcoin, have a guaranteed PIK or a guaranteed accounting benefit, And so that really appeals to someone with an investment portfolio. It solves the problem for the limited partners. They don't have the volatility. It solves the problem for the general partners of the VC. And then you're the entrepreneur, and you've got a Bitcoin exchange business, and you want to compete with Fidelity and Goldman Sachs and Coinbase. It might work, but then again, it's kind of hard to compete with companies 100 times as big as you. So if you pursue the strategy I just articulated, if the business succeeds, you make a ton of money, and if your operating business fails, you still make billions and billions of dollars. So you make a ton of money if you fail, and you make a ton of money if you succeed, and the people that invest in you make a ton of money, and the people behind them don't have the volatility of Bitcoin. They just get gains on Bitcoin as everybody's winning. So who's losing? And the answer is, with digital capital, nobody's losing. And so that works with a private company. It works with a big private cash cow, like a $500 million utility company or trucking company or something. You just do it with private equity and not venture capital. It works with a mid-size miner. And then if we go on to non-Bitcoin companies, the world's full of zombie companies. And here's a zombie company. A company with $500 million in revenue that makes $80 million in cash flow, growing 0 to 5% a year, and it has $2 million a day of its stock trading, is dead money. No options, $2 million of stock, and is valued at 1 times revenue. Now, and it has a little bit of cash. It has hundreds of millions or $500 million in cash. So what kind of company is that? Okay, that's a zombie. What's your future? You don't have a future. Why do people not trade your stock? Because nothing interesting happens for a year. You can check in once a year. Why would I buy something that I can predict the future of it? Will it go bankrupt? No. Are the options valuable? No. There's no volatility. The options are worthless. So you're gonna comp your employees in stock options? Good luck with that. The stock options are worthless because the options are worthless, okay? Who was that? That's us. I'm describing MicroStrategy in March of 2020. That was our company. But, and so how do we get ourselves out of that situation? If you're a zombie company like that, you go to a investment banker like Goldman Sachs or Morgan Stanley, and you say, help me. Their answer is, you need to do a transformational deal, a transformational acquisition. You either need to do a merger, or you need to use your cash to buy a high growth company growing 20% a year, and then you get some growth back into the stock. So you got to go do a deal. But it's hard to find an easy deal to do for $500 million where the thing you're buying is going to go up 20% a year, where you can actually integrate it. And so what is that thing? Well, that's Bitcoin. Bitcoin is the universal merger partner. So you can merge any zombie company with Bitcoin at 200 million scale, at 100 million scale, at 1 billion scale, at 2 billion scale, at 20 million scale. And it's actually reversible. You can merge in 20 million, you can reverse it, you can test it. And what happens is you take a $600 million company with $10 million of stock trading a day, and you buy 100 million of Bitcoin. The stock gets attention, it starts doubling, it gets volatile. Oh my God, the Bitcoin traded down 20 million, it's up 20 million. They had like 1 year worth of bad news. And everybody sells it, but then you have 1 year worth of good news the next day, and everybody buys it, and now the stock trading triples. Now the options come to life. Now the employees are getting paid. Now there's a future. Now you can raise, it's this conundrum I laid out. If you're conventional, you make the volatility go away, you give away the capital, and if you need money, you pay 10% interest for junk bonds. Like, that is when you need the capital, you can't afford the capital, right? Isn't that perverse? If I give up my capital and when I need it, I pay 10 to 12% interest, right? On the other hand, if I reverse it, I buy some Bitcoin, I get the volatility. What does it matter? If the volatility comes from Bitcoin, it doesn't matter. Now, the volatility, the stock goes through the roof. The cost of capital goes through the floor. Now, when you need to borrow $500 million, you don't even need the money. So, of course, the market gives it to you for free. right? So you can either be rich and have money for free and have high volatility and high option value and have 100 years worth of operating losses. And that's one strategy. That's the MicroStrategy, right? That's what we did. That's the Bitcoin strategy. Or you can do the opposite. You can be a zombie company and you're dead money. And so I think that we're more likely to see the mid-sized zombie companies, the $500 million revenue, the $1 billion revenue company with $5, $10 million of stock trading a day. We're more likely to see them limp into Bitcoin, post FASB, than you will see the super marquee best run companies, because they feel like they don't need anybody's help. But these other companies, there's 1,000 companies that are mid-size, mid-cap. The Russell 2000, right? The number one performer in the Russell 2000 was Supermicro. The number two performer was MicroStrategy. And the two companies are like 35% of the return on the Russell 2000, right? So what about the bottom 1,000? They're public, right? So I think that's the next interesting development and opportunity here.
Yeah, I think the irony is let's talk about 1,998 companies in the Russell 2000, and let's say they carry 20% of their revenues in cash on their balance sheet. Andrew, you've been a corporate treasurer before. The job of the corporate treasurer typically is to do no harm, right? That's what you're told as a corporate treasurer, do no harm. But if you're carrying $100 million on your balance sheet, earning, what can they get now, 5%? Versus today, inflation, right, is 8%.
If you look back in March, it was 0 to nothing, right? So
inflation 7%, right? The S&P is gaining more than that. It seems like you're doing harm if you're keeping $100 million on your balance sheet, gaining 5%. But Andrew, so we have a bunch of investment banks and banks that have partnered with us here now. What's also difference between 2024 and now is we have folks like Citibank, like TD Cowen, Canaccord, BTIG, Moelis. Thank you for all your support. They have the formula now. So tell us about what that opportunity creates, Andrew.
Yeah, so still fresh in my mind and many of our minds was our activity in the first quarter around the convertible debt markets. Michael explained that sort of option or lever to generate capital to buy Bitcoin. I think what's transformed, probably in the past 4 years as well, is one, the support in that capital markets. As you just mentioned, there's a lot more banks that are out there willing to think about this with you and be alongside you. I think you alluded to in a previous panel that in 2021, there was one person that would talk to us. Right now, we have access to all of the best banks. There's still a couple that are out there that are probably lagging a little bit, but there's definitely more support in the investment banking community. There's also a significant amount of support in the investor community. So what I mean by what still resonates with me is what we did in Q1 is we launched a convertible debt offering. And I think, from what I've been told, there's been no one else that has been able to go back the very next week and issue another convertible debt with similar execution, sub 1% coupon, 6 to 7 year money at 40+% premium, which we then converted directly to Bitcoin. So not only are there people supporting the execution of that, there are people and investors who want that exposure as much as we're willing to give it. And so that's how that ecosystem really comes together. And so as I hear, what should other companies think about? Can they go raise convertible debt? Look at what MicroStrategy's done. Part of what we're talking about is the playbook. You can go do that too, and you can find that intelligent leverage to be able to create shareholder value like we've done in the past 4 years.
So let's go to the next concentric circle. So with the Russell 2000, you have the corporate treasurers who ironically are told do no harm. And that's exactly what they're doing by just keeping cash on their balance sheet. In a money market, at best, they're doing harm. Now let's go to the Fortune 500, where usually the corporate bromide or trope there for the corporate treasurer is if you don't know what to do with the money, give it back to your shareholders because they'll do a better job and they can make a decision of what to do. So what you see are these high cash flow, high cash balance companies either paying large dividends, and you're seeing that now more and more tech companies paying dividends or doing large stock buybacks. But I think there's an alternative, Mike. Let's hear about that.
Yeah, the conventional wisdom is I buy back the stock or I issue a dividend. The dividend is sort of double taxed, and so that seems very tax inefficient. The buying back of a stock is the decapitalization. The real problem as I see it, I've said before, the road to serfdom is working exponentially harder for a currency growing exponentially weaker. So let's say you're a big company like Meta and you have a good quarter, you basically cut a bunch of cost, you put a lot of money to the bottom line, the stock doubles. So now there's pressure to keep the stock price up. So the way you're going to keep the stock price up is you announce a $50 billion buyback and a dividend. Okay, so now I'm decapitalizing the company. I'm basically surrendering the capital. The assumption is that I can't get a yield on the capital if I invest it in a liquid treasury asset. And that is true if the only option is T-bills. If your option is T-bills, then your 3% after tax against a 12% cost of capital is 9% negative yielding money. And the view is, yeah, that's value destroying, give it back. But here's the problem. You need to be convincing the world that your stock is a store of value over the long term. So for the stock to be a store of value, then you're going to have to increase the value of your assets in the treasury at a rate equal to the cost of capital, or you're going to have to grow your cash flows at a rate equal to or faster than the cost of capital. So when you decapitalize, what you're doing is you're doubling the market cap of the company, but now the market cap doesn't trade based upon the book value of the company. It trades based upon the forward earnings estimates or forward cash flows of the estimates of the company. And the higher the stock goes, or the higher the stock price goes, the higher the discounted cash flows have to go. And the higher the inflation rate is, the higher the discounted cash flows have to go. So the stock is becoming more fragile or more brittle. And if you have one bad quarter where you underperform, the likelihood that the stock crashes, dramatically goes way up. So that idea of surrendering the capital is a road to serfdom. In the extreme, the first step is I surrender my capital. I have some bad quarters, so I have to borrow a bunch of money. And then the extreme step is I surrender the capital, then I borrow a bunch of money to surrender more capital. I have negative capital, like say Apple Computer is almost negative capital, but you can get the point where you're actually in debt 5x your annual earnings or 10x your annual earnings. And at that point, then just a weak quarter is a death sentence for the company. And that's why most mid-sized companies and all the LBOs, they eventually fail. That's why there's like a 99% corporate death rate amongst those kind of companies. And that's why the average corporate life expectancy is 2 years. So the opposite of that is to reverse the polarity. If the treasury asset yields 24% and the cost of capital is 12%, the question is how much capital do I want? And by the way, really the opportunity cost of capital is 12%, whereas the actual cost of capital, that varies by corporate entity. Apple Computer could borrow money at half of that number, I suppose. And if you use convertible debt, if you have a volatile equity, you could borrow money at a tenth of that number. So the amount you pay for the capital may be and probably is less than 12%, but the use of proceeds is the critical question. And so if the use of proceeds is T-bills, then any amount of capital is dilutive, and you want the bare minimum working capital. And if the use of proceeds is Bitcoin, Well, Bitcoin has been yielding 3 to 4 times the return of the S&P index. And if you extrapolate out a decade, the volatility will come in, the performance will come in, but I think it's very reasonable based on first principles to assume that it will be returning some, 2x the multiple of the S&P, or 50%, or 75% more than the S&P index. And the volatility will always be higher because it's a 24/7, 365 global traded digital asset in unregulated markets. It'll always be higher than the S&P, and the performance will be higher because of lack of dilution. So in essence, it's a very simple polarity question. If you get 24% yield on a tax-deferred yield on the Treasury, then you want as much capital as you can gather. And if you get less than 12% yield, you want as little capital as you can carry. The only company I can think of that the famous one that uses its balance sheet is Berkshire Hathaway. And Berkshire Hathaway's investments in like Apple and Coca-Cola and the like allowed it to beat the S&P performance, and that's why they could have a $1 trillion balance sheet, and they have $1 trillion of liquid capital, or something like that, $1 trillion balance sheet. But the problem is they pursued their strategy using securities as a treasury asset, not using commodities or property. And because of SEC 40 rules, you can't have more than, what is the number, 40% of your liquid capital as securities. And so they hit some wall, and then they have to go off and do big acquisitions of operating companies in order to grow, and those are always much more difficult. Or they have to carry $160 billion worth of T-bills, because those are carved out. They're treated not as securities for the purposes of that. So in essence, they hit a wall, and Berkshire stopped being able to grow in the same way because of some constraints and because they have not embraced Bitcoin. If they embraced Bitcoin, then they could actually grow faster and they would be performing better. And I think that that Bitcoin really is the game changer, because it flips the polarity from negative to positive. And imagine what happens when 10,000 operating companies start recapitalizing. Imagine a world where 10,000 companies keep their cash flows and don't dividend them out. Imagine 10,000 companies buying Bitcoin instead of buying their own stock. Imagine 10,000 companies issuing debt securities to buy Bitcoin instead of issuing debt to buy their own stock, right? And you can see how at some point, as you go from 1 company to 10 companies to 100 companies to 1,000 companies, at some point these become a massive capital gateway, and that's how you see the trillions and tens of trillions of dollars of capital flow out of the analog economy into the digital economy, and the world turns upside down for those firms.
Yeah, it's as if corporate treasurers and banks have forgotten, what they learned in business school, or they learned in microeconomics or corporate finance. If you can find an investment that exceeds your cost of capital, whether it be 5%, 7%, or 8%, you should invest in it. And if you can't, then it means you should return it to their shareholders. In this particular case, there is an investment that can exceed the cost of capital, and they have I would say, a fiduciary responsibility to make the investment. And then you can say, well, do you think it's going to return 10% or 15 or 20 or 24? I think Mike's conservative with 24. You can have that debate and argument, but returning it to the shareholders is basically giving up. Right, you have nothing better to spend your money on at this point in time, so you're going to give it back to their shareholders because, in theory, they know better what to spend it on. And I just think whenever I hear corporate treasurers or CFOs or CEOs or boards talk like that, it just feels like they've given up at that point in time, as opposed to they have a responsibility to their shareholders.
You're just waiting to die. Like the money is just you're just waiting to die.
I'll go with giving up. So what's next? What do you see next, Andrew? What do you see next, Mike? I mean, we have a formula. I can understand why in 2020 and 2021 folks haven't adopted it. It's that the timing is amazing, right? We now have the Bitcoin ETPs and the institutionalization of the asset class, right? We have the new accounting standards in place. And we're starting to see what Square is doing. They're putting their money where their mouth is, but the timing is actually quite nice that they did it this quarter because there are two fundamental shifts. 10% is a good start, Michael. You know, it's Rahani, not you. When do we start seeing more? When do we start seeing the companies start to adopt?
I think you get a parade of endorsements. You're going to start getting 13F filings here in May, and you're going to see, a parade of famous investors and famous funds that started biting off a bit of Bitcoin, and that's going to change things. I think you're going to see more and more securities issuances, more ETFs. Then you're going to see more derivatives. You're going to see more public companies. I think you're going to see more Bitcoin miners. They're going to be announcing that they're not just mining Bitcoin, they're buying Bitcoin. I think you're going to see more good news coming from the clients of Square, right? And small, mid-sized businesses. You're going to see more of them. I think you're going to see more of the exchanges announcing that they're taking some systemic view. I think it'll be just bit by bit, every quarter, one more normalizing, program that builds Bitcoin into the capital structure of a private, a public company, a fund. You're going to see. I think over the next 4 quarters, you'll see announcements from the big banks that they've approved Bitcoin ETFs for unsolicited sale, and it'll be one a quarter, and then the next one, then the next one, then the next one, and then you'll see announcements that it's marginable, and then you'll see, like you saw last week, a dozen funds at Morgan Stanley approved Bitcoin to be incorporated in the fund, and then a bunch at 2 at BlackRock, and I think you'll just start to see more and more of these things. And that will drive the news cycle. And then I think you'll see some of these small, mid-size, these zombie companies. We've had CEOs of some of these companies reach out to us. I've had them reach out to me, and it's like when you're stuck and mired and your options are worthless and you're worried about losing your employees and you want to put some life back into the company, you need to do a deal. I mean, at that point, it's very simple. You're either going to sell yourself, and the deal you're going to do is sell out to a bigger entity that can get value out of your product, or you got to buy something or buy somebody, or it's either a merger of equals, or you're going to buy a small, high-growth thing, or you're going to sell out. And up until 2024, I don't think Bitcoin was an institutional option. The banks were afraid of it. Public companies were afraid of it. They didn't know which side the SEC would come down on it. I think by the end of 2024, I think the institutional world, the public company world will say, well, Bitcoin's not going away. Bitcoin's the only crypto asset. It's the best. There is no second best. We're not going to get shot to have it on our balance sheet. And at that point, people switch from fear, or fear of doing something to fear of not doing something, or maybe from fear to greed index, and they click it up a bit by bit. 2025 to 2028, those are kind of the years of early adoption. But good for us. It doesn't take much at this stage. It takes 2, 3, 5, 10 companies to act, and you kick off a roaring bull run. It doesn't take much to move Bitcoin from 60,000 to 150 or 200,000. When we get to 200,000, we're going to need, 10x more capital to move it to the next level, but they'll be on stage with us then.
Well, Michael, Andrew, it's been a tremendous journey, and we're just getting started. It's still early. I do want to thank all of our shareholders, and all of our customers and our analysts and our partners and everybody else who's joined us in person and online. I'm going to hand it over to Natalie to close things out. Thank you all.
Thank you so much. And a testament, once again, to the leadership. I mean, MicroStrategy has been a pioneer when it comes to Bitcoin corporate adoption. And I mentioned this yesterday, but I've been so impressed by all the people I've met who work at this company, and so many of them have been here for decades. So that says a lot about the leadership that's coming from the top. Thank you so much for joining us for MicroStrategy World Bitcoin for Corporations. I think they've painted a very bright orange future. I hope a lot of you have learned something new. If you haven't gotten your fill of Michael Saylor interviews, I just did another one. You can check it out on my podcast. I'm Natalie Brunell. Thank you so much, everyone, and thank you so much to the sponsors.